Well, welcome everyone. Sorry for all the delay on starting, but it's my pleasure to initiate another webinar from AMIS, and this will be our third over the last few months public webinars. And this one is on fertilizer markets and implications for agricultural markets and food security. I think we have a really good panel. We have two panels. The first panel is going to be moderated by Arnaud Petit, who's the executive director for the International Grains Council. Arnaud will introduce the members of that panel, and then that's going to be followed by a discussion panel moderated by Seth Meyer, who's the current chair for AMIS and also chief economist at USDA. And I'm going to do my best to get out of the way. So Arnaud, I'm turning it over to you right now.
Thank you very much, Joe. And again, thank you to you and to Seth for this initiative, because it's very topical issue to discuss today about fertilizer market and energy and potential impact on grains production. So again, thank you very much for this initiative. And I would like to maybe just before passing the floor to the panelists, just to remind that on the grains market, we went through a difficult period of time in terms of prices, but now thanks to figures on the harvest, but also the agreement between the four parties, which allow grains going outside of the Black Sea region. We have seen the price going down on grains, but also on soybean, and as there is a good perspective. In parallel, we can see in the energy market and consequently on fertilizer markets, there is still uncertainties and risk of uncertainties on that markets, which can indeed have an impact on farmers' productivity and farming profitability. And I would say that's maybe the first point we would like to go further with our guests and speakers for this first session. I would like to introduce the first speaker, John Baffes from the World Bank. He's member of the World Bank Prospect Group. He leads the commodities unit and is in charge of the commodity market outlook. And John will give us a brief development of commodities market. John, you have the floor.
Good morning, everybody, or good afternoon. Thank you very much, Arnaud, and thanks to Joe and AMIS for inviting me for this meeting. As you nicely said, I'm gonna give you a brief overview of the energy markets, the recent developments, and where we're heading according to our beliefs. So let me start with commodity prices and show you the three commodity price indices. Next slide. The three commodity price indices: agriculture, metals, and energy. The shaded area to the right begins from March 2020, just at the beginning, right at the beginning of the COVID-19 pandemic. And what we see there during this period of time, we see two distinct patterns. Kind of collapsing energy prices, a somewhat smaller decline in agricultural metals, a recovery. But the recovery has been, the collapse, of course, has been much sharper for energy prices and much softer, so to speak, for agricultural metals. And for the past 2 quarters, what we have seen that both agricultural metals prices have kind of softened, but energy prices have kept going up. In fact, I did a very quick calculation this morning, and of the 20 months since the beginning of the pandemic, energy prices have increased 22 times. So of the 28 months, 22 times energy prices, 22 months energy prices have increased. Furthermore, the average increase is 9% versus the average decline is 4%. So it's clear from this chart and the numbers that there's a big issue with energy markets. That, of course, affects, as we all know, fertilizer markets, directly the agricultural sector, etc., etc. Let me go to the next slide now, get a bit deeper and give some more granularity on the individual energy markets. Again, it's clear here that energy prices have increased across the board. To the left, we have natural gas prices in the US, natural gas prices in the EU. They all have increased, but the scale of the increase is much different. In the US, for example, we have a kind of doubling in energy price, in natural gas prices. In the European Union, the increase is much larger, is perhaps close to an order of magnitude. They have gone something from 2 per million BTU to no, I'm sorry, from 5 to 6 million BTU. Currently, it's up to 70 to 80. Again, as I said, by an order of magnitude. Now, we have also seen similar increase in oil and coal markets, what we see to the right. But again, there we have seen sharp increase, but there's a bit of a discrepancy in the scale. Oil markets, or rather oil prices, has pretty much returned to the pre-2014 collapse in oil prices, around $100 per barrel, while coal markets behave in a very similar manner as the natural gas in the European Union. Coal prices have increased from something of 70 per ton in the early stage of the pandemic, and now they are trading at close to $300 per ton. So that's pretty much the picture of the energy markets, with kind of two patterns increase across the board, but natural gas in the US, LNG and oil, moderate increase, natural gas in the European Union and coal increase that have reached in some occasions in one order of magnitude. Now, let me take a bit of a long-term perspective, because I think it's important to give us an understanding of what we expect in the near future. When we look at the longer-term oil prices, 1970 to now, monthly data, which, by the way, they have been deflated by the CPI. We have taken January 22 as the base year. So what you see in this chart is current prices in today's terms. We see that indeed prices of oil are high, but we have at least 3 periods in which price of oil were much higher. Back in the 1970s, or rather 80s, the second oil shock, in the price spike prior to the financial crisis, 2007-2008, and also in a kind of 4-year sustained period between 2010 and 2014, where oil prices in today's terms exceeded $100 per barrel. In summary, oil prices today are high. They are trading around $100 on average, or 90 in the past couple of months, about 50% higher than the long-term average. But again, from a longer-term perspective, prices are not as high as the oil prices are not as high as they have reached previous periods. Now, if we look at the same picture for European natural gas prices, the picture is completely different. We see that over a long period, the average of European natural gas prices is $8 per million BTU. During the period of October 2021 to, I'm sorry, it's not May, it's today, it's August of 2022. This number is 36 million.
La curva del gas natural, el precio, boom, se disparó.
And the prices have reached $8 million BTUs, almost an order of magnitude compared to the long-term average. A similar picture in the next slide we see that has taken place in the oil markets. Again, over the longer term, in real terms, we have seen prices a little below $100. It's $90 per barrel between 19 and October 2021. When we take the last year and a half, we see that the average is 200 and almost 270, which is three times as high. So what happens is that we see this huge increase in energy prices compared to other commodity price indices. And when we get deeper into energy prices, we see a discrepancy, or a dichotomy, shall I say, in between oil prices and natural gas prices in the US, as well as LNG, versus coal prices and natural gases in Europe, which have increased either by an order of magnitude or by an order of 3 or 4 times. So where we're heading, as Arnaud said, my job here is in the World Bank is to sort of monitor commodity markets and manage the commodity markets outlook. And let me tell you, this is perhaps the most difficult period in terms of trying to forecast where commodity prices, but in particular energy prices, are going. Now, as we see in the next slide, we basically have one huge uncertainty. The European Union or the G7, depending on which commodity you are looking at, have proposed a price cap to Russian energy exports. It's still not clear. There are a lot of uncertainties if this price cap proceeds, what shape it's going to take. There is uncertainties as to the level of the price cap. For example, in the case of oil, Russia already receives, it used to sell its oil at a 30% discount. Recently, reports show that this discount has shrunk, has gone down to 25 or 20%, but still Russian oil is Russia sells its oil at a substantial discount. So even if a cap is applied to Russian oil, that cap has to be above 30% for the cap to work, to make sense in terms of basic economics. There's also a second question. If the price cap proceeds, which commodities to include? Is going to be only for oil, natural gas, or is it going to include oil products? Third issue is which countries are going to participate in the price cap. We see that there's some disagreement within the European Union, especially some southern and central European countries. They are not as keen in the price cap as other countries from the north. The biggest question of all is major energy importers such as India, China, and Turkey, whether those countries will participate in this attempt. If they don't, then many analysts, including myself, believe that such an attempt may not be as successful as expected. There is also other questions, and there are a proposal that the price cap should not apply to Russia only, but the price cap should cover all energy or natural gas and oil exporters. That's a very interesting proposal because if that sort of materializes, goes ahead, and then countries like such as China and India join the proposal, and again, it's a big if, then what we are having now is we're going back to the 1950s or the 1960s when we had the commodity agreements where both producers and consumers agreed that certain trade flows should take place in the commodity and the prices should fluctuate within sort of a tight band. So we're going basically 50, 60 years ago in terms of policies, and it's questionable as something like that could materialize. Lastly, a lot of logistical issues that, again, I have not seen, and many analysts have not seen how those are going to be sorted out. Regardless, if a price cap goes ahead, there's a big risk. And this risk, for example, if Russia has made this point very clearly, that if the G7 of the European Union and other countries go ahead with a price cap, then Russia could retaliate. Russia already has cut exports of natural gas through the Nord Stream. Exports from natural gas from Russia to the European Union still continue through Ukraine and through the southern stream Turkey. Russia has clearly said that if price cap proceeds, they're going to cut completely natural gas exports to Europe. So that's where we stand in the energy markets. Again, the price cap, what shape it's going to take, if it proceeds and when, and what's going to be the response from Russia is a big uncertainty now. And of course, that's the kind of what we call as an upside risk. And the downside risk is something that may happen in Russia, a change in regime or a quick resolution to the war, and we could well see huge declines, huge reduction in energy prices. Again, as I said earlier, this is, from my perspective, probably the most difficult period to make statements about outlook and forecast on energy prices. Now, I'm going to take 2 minutes, and instead of concluding my presentation, I'm going to ask a question which is going to be, I guess, relevant to the entire panel. The question is the following. Can I have the next slide? If we look at, when we look at wheat prices, which is in the next slide. Yeah. Here, when we look at wheat prices, I do the same exercise here as I did for the energy price I showed you earlier. Those are wheat prices in real terms, real meaning January of 2022. What we see is that wheat prices, it just happened, in fact, by luck, that this month have been exactly on the long-term average for the last 52 years. So this is one takeaway point that I would like to to consider. Now, the second takeaway point is the following. If we look at the next slide, and we take what I have done here in the chart to the left, I have constructed a stock-to-use ratio, but I have included 12 components. Calorific weights. And what we see there, we do have a moderate decline of this aggregate stock-to-use ratio from 2016 to now, from 31% to 27%. But again, this decline, I would say, is very moderate, and it's where we are now compared to the 2006. It's much, the stock-to-use ratio now is much higher than compared to 2006, when it had reached a low of 17%. Again, this is the aggregate measure. And when we look at the right figure of the food price index, again, we do see an increase, but when we take real data, which is what the right figure of our food price index has, we see that we are far below the highs we have reached during the 2007-2008, which is not shown here, as well as 2011-2012 period. So what I'm trying, the question I'm having to the panel is the following. When we look at energy markets, fertilizer markets, disruptions in trade in those markets, and the geopolitical issues, one word that we describe that sort of situation is a turmoil, so to speak. Now, when we look at grain markets and food markets, on the other hand, we just don't see that. We don't see that. We see wheat prices being right on the average across a 52-year period. We see stock-to-use ratio having moderated, but still high by historical standards. And we also see a food price index, which has increased, but not unprecedented increase, but again, by historical standards. And the question I receive from my colleagues, especially the senior management, is why you tell me, so I tell them, that there is so much turmoil and so much commotion in energy markets, fertilizer markets, geopolitics, disruption in energy markets, and that does not translate in big disruptions in agriculture and food markets. So this is, instead of a conclusion, I have this question that perhaps the panel at the end of this session, perhaps next panel can give us some light. I do have some answers, but I would like others also to elaborate on this. I will stop my presentation here, and I'll be happy to answer questions later on.
Thank you very much, John, for your presentation, and I would say, and particularly the end of your presentation.
Hello.
When you, yes, hello.
I'm Joseph. I'm very sorry to interrupt you now. Okay, somebody has bestowed administrator rights on me, so it's a rare occasion where I don't like to be privileged, but this is really one. So I have to admit all new participants to this meeting. It's immensely disturbing, and I hope that the organizers can change that. And
okay,
given the fact that I've taken the floor in a very cheeky manner, I'd be happy to also address John's question.
Okay, great. Joseph, so I hope, Dennis, you get the message for the administrative matter to try to get this sorted out for Joseph. And maybe, Joseph, before we to go to you and your presentation, what was aiming is to get maybe a discussion, first of all, with Laura Cross from IFPRI, International Fertilizer Association, in order to have a better look about how the industry is looking the demand and the use of fertilizer, bearing in mind what John just put on the table as a question is how this energy market development will pass through and go to the food index prices. And I think there is very interesting point that I'm pretty sure Seth will also keep in mind the point you raise, John. So Laura, you are Director of Market Intelligence Service at IFPRI. IFPRI is an encompassing organization for all actors in the fertilizer value chain, from producers through traders and distributors. So you are really a very interesting platform when you can provide us more in-depth information about fertilizer demand and fertilizer use from your industry. So Laura, you have the floor.
Great, thank you, Arnaud. And just to check that you can all hear me, because I was having some issues with my headset earlier.
Perfectly well, Laura.
Excellent. Well, firstly, thanks for the invitation to speak to you all today. I am probably a bit biased, but I'm very excited and pleased that there is attention and interest being shown in the role of fertilizers. And hopefully in the next 10 minutes, I can give you a quick overview of what is happening in the global market and also why the structure of the fertilizer industry has meant that there has been so much disruption, to lean on John's description of how people are discussing this area of the agricultural market at the moment. So firstly, just to give people a quick reminder, some of you may already know this, but a really important aspect of the production of fertilizers, the major 3 macronutrients that are essential for crop growth, is their global spread around the world. And there are a number of different interactions that each of the major nutrients has with different parts of the world, with different trade disruptions or geopolitical events that we've seen happening. And I'll quickly take you through some of those issues that we've seen and also why that makes a difference in light of what's happening in Ukraine and also in the energy markets, importantly. So firstly, if we think about the nitrogen market, there are a couple of really important backdrops to the way that nitrogen fertilizers are produced. The first is that they are energy intensive, so between 70 and 80% of the production costs of ammonia are natural gas. Almost everywhere outside of China is using natural gas for nitrogen production. Importantly, also, in light of some of the issues that have happened in Europe more recently with the natural gas market, the marginal producer of nitrogen is very much within Europe. And I'll come on to, in a couple of slides' time, what that has meant for the European market, but also more globally, that has ripple effects because of the commodity nature of these fertilizer products. And then lastly, a really important point is that nitrogen fertilizers tend to be pretty inelastic to crop prices. Therefore, even when fertilizers are relatively expensive, it's still very, very common that farmers will put other inputs aside in order to prioritize their nitrogen application. You can see that when you look at different farm level costs. The nitrogen fertilizer component is very steady because there's a very direct relationship between nitrogen that is applied and the yield that farmers can expect. Then if we move to the phosphate market, and this is primarily dictated by the deposits of phosphate rock around the world, there is still an exposure to energy-derived products. So 2 of the key raw materials in the production of phosphate fertilizers are ammonia, which, as I mentioned, is a byproduct of natural gas, and also sulfur, which is a byproduct of the oil refining process. So even though phosphates have been somewhat less exposed to direct impacts, producers are still seeing higher raw material costs than they have done in many previous years. Now, for phosphates, and also as I'll come on to the case for potash, there is a much closer correlation between the price of phosphate fertilizers relative to finished crops and their use. So we do see that in times in the market when fertilizer prices are high relative to the crop that's being grown, we see consumption being impacted if there is a tightness and a squeeze at the farm level in terms of margins. And lastly, probably one of the most directly impacted markets as a result of what we're seeing happen in Russia and in Belarus with regards to international sanctions is the potash market. And when you look at the suppliers of potash to all of the different consumers around the world, if you take Belarus and Russia combined, that's more than 40% of what moves around the world is originating in those 2 countries. So that's been a really big limiting factor on the supply of potash over the last 18 months. And as I mentioned with phosphates, we also have this correlation between the affordability of potash fertilizers and their consumption. Now, for potash this year, what we're expecting is actually a double blow. So on the one hand, you have an affordability restriction when it comes to use, but you also have an availability restriction, because by restricting the amount of potash that comes from these sanctioned countries, there has been an availability issue in the international market. Now, I mentioned that affordability has implications for fertilizer use, and you'll see from this chart here that it actually looks like in the last few months or so, the pressure has come down on fertilizer prices. So you can see that from the highs that we saw earlier this year, that was directly after the sanctions were first imposed on Russia specifically. You can see that phosphates and potash prices actually have tailed off somewhat since then, although they're still at the level of the 2008-2009 financial crisis. Nitrogen is far more volatile, just as a nature of its traded volume around the world, and I'll come on to that more specifically in a moment. But what I want to draw your attention to first is the annual change that we tend to see in fertilizer consumption relative to those fertilizer prices. And I've used this as a proxy because we could give an entire presentation on the relationship between fertilizer and crop prices. But you can see here a very clear relationship between the level of fertilizer prices and how much fertilizer was actually consumed. Now, this year, in light of everything that's happening around the world, we've seen a new element come into the fertilizer markets. On the one hand, we've seen varying international response to the actions of Russia in Ukraine. We've seen some sanctions put in place. For other countries, we've seen more of the door being left open to trading with the country. However, what we see now that we perhaps haven't seen in previous sanction eras is the impact on food security. So we've seen a really increased amount of attention on the role of both food and fertilizers from the Black Sea region. And we're seeing some of these large jurisdictions like the US and like the European Union having to come out and really clarify the role of sanctions and not wanting to actually limit the availability of fertilizers or food in the global market. Now at IFPRI, we produce a 5-year forecast of fertilizer supply and demand. And I just want to show you some of our latest forecasts that we've published in light of what's happened. So for the nitrogen market, there is quite a widespread in what could possibly happen. Going back to John's comment about this being a very difficult time to forecast the energy markets, I would say it's quite similar for fertilizers as well. And for nitrogen, we see a combination of the gas economics around the world, especially in those high-cost regions like Europe, and also the ability of Russia in particular to trade with other importers around the world. For phosphates, our scenarios are slightly closer together, and that's really driven by the fact that Russia and Belarus are much smaller contributors, Belarus not at all, in fact, to the global phosphate market. So it's naturally slightly less of an impact. And there are also a lot of future capacity expansions playing out outside of that region as well. And then hopefully in line with what you would expect based on what I mentioned in my previous slide, for potash, this is really where we see the heaviest amount of downside. And that's primarily driven by the role of Belarus because it is a landlocked country. And we're seeing issues with the transport through Lithuania to the international market. So even in a best possible case scenario, we're still seeing a reduction in potash capability in the next coming years. Now, in terms of what that could mean for fertilizer use itself, you can see that in volume terms, just because of the nature of the size of the markets, we're expecting to see large declines in South Asia and East Asia. But one of the areas we really have to be mindful of are the more fragile agricultural markets and those where there has really been a difficulty in terms of credit at the farm level. So this is where we see regions like Sub-Saharan Africa really being the most exposed to some of the potential reductions in fertilizer use. And lastly, just as a segue for me, leading on to Josef, who's going to talk about fertilizer trade, something I really want to underpin is the role of gas in the nitrogen markets and the impact that has on the rest of the fertilizer value chain. So when we put together these forecasts a couple of months ago, we made adjustments in both our Russian forecast and our Europe forecast. Actually, in terms of how things have played out recently, we've seen Russian capability be at the higher end of what we had initially expected. A lot of that is down to interventions being made by the UN and the opening up of trade routes wherever possible. But for Europe, we've actually seen the scenarios move much more towards the pessimistic end. And at the moment where we stand in the European market, we're far below our pessimistic scenario. And this is what the regional production of nitrogen currently looks like today. So there's around 70% of European production which is curtailed as a result of the high gas prices that we've heard about. And the reason this is so important for the world, this isn't just a Europe issue, is because Europe will become a very flexible importer of fertilizers. If it doesn't have enough domestic production to meet the requirements, European farmers, as many others around the world, are still not in their best financial position, but they do value the use of fertilizers and they are much more likely to import than some of those other fragile markets that I mentioned. And what this does is this puts pressure on the global market as a whole. So it's not just 70 to 80% of 18 million tons of nitrogen. It also has an onward impact onto the rest of the world as well. So that's the end of my presentation. At this point, I will pass it back to you, Arnaud, and then to Joseph. Thank you.
Thank you very much, Laura, for your very insightful presentation. Maybe I would like to highlight 2 points. First of all, you clearly identified that the impact by regions across the world are different. And thank you very much to highlight specifically for Asia and Africa, where we see it's not necessarily the question of market access in terms of volumes, but a matter of a trade finance tool, as you refer to. It's very important to highlight that point. And also maybe on your last point on pinpointing for Europe, I was thinking, and maybe for the panel could be also a discussion about how the recycling of nutrients can be also part of a response from the farming sector to try to alleviate that cost. So just just first reactions, but again, thank you very much for your insightful presentation. And you highlighted the matter of trade, and now I'm turning to Josef Schmidhuber. I'm very pleased to be with you today on this panel discussion. And Josef is the Deputy Director of the Market and Trade Division at the Food and Agriculture Organization of the UN. So Josef, you would like to tell us more about the trade, and because I assume between fertilizers and grains, the trade is a bit different. So the bulk definitively, but is the shipping sector so relevant like on the grain sector? So I give you the floor to tell us. Thank you.
Thank you very much, Arnaud, and thanks to Laura for the nice segue. In fact, you have already anticipated some of the points I'm trying to make now. I'm challenged again because I need to share my screen, and I hope it does work. Just a sec. Can you just give me a sign as to whether you can see my presentation?
That's okay, Joseph. You see it.
Okay, here's a brief overview. I will just start with, so the presentation is about a new tool that we developed over the last couple of months. It's a fertilizer trade tracker. I presume you have already tried it out. It was for a long time on the landing page of FAO. So a lot of people actually are using it, and I will try to explain why we did this and what the approach was and how it looks like actually in practice. And I will perhaps I can try to use it here online. The thing is that I'm in my little sanctuary in the Alps, and the bandwidth is very, very limited here, and I'm probably not trying it out. I just tell you what you would see if I did, and then a few things beyond the tracker and actually some of the trade shifts that we are seeing at the moment, and Laura has already alluded to those. Okay, so why do we do the tracker? Why did we develop this? We received with the fertilizer crisis a lot of requests for trade information. And by looking into the requests, we noticed that a lot of countries, actually, not even some, they don't track fertilizer trade on a monthly basis. And perhaps more worrisome even, those who do track it, the number 2 here on that slide, they make calculations, or they undertake calculations that are entirely inappropriate. So many of them, it's not only those that I mentioned in at other occasions already, they are simply adding up the various products, and then they look at historical trends for the products and the sum of the products, and then they decide whether they have enough or not, rather than converting everything into the nutrients so that they really know how much N, P, and K they have imported or exported. But basically, it's only the importers. And we do it for a third reason, and that's essentially with a view to the future. So countries are also asking, where can I buy? And I guess in the future, it's not the case at the moment. Exporters may actually be interested in identifying countries with unmet import needs. And perhaps there's a fourth reason, and I'm trying to delve into that at the end of the presentation, is just to have a tool that allows us to ask questions, pertinent questions as far as the supply situation in certain countries is concerned. And actually, I will look into the EU because there is a big conundrum for me, and perhaps the panel can clarify this, help clarify this. Okay, so the first challenge we had was actually that we do not have a supply utilization account. We do have supply utilization accounts, but they go back at least 2 years. So for the current year, we don't have anything, and we certainly don't have anything on a monthly basis or anything that allows us to draw inferences on how much a country still needs to import or can export. So the first challenge is actually to establish a baseline, and we are doing that. We're doing this with a complicated process. It's all documented. It's all on the web. If anybody is interested in it, please read, and I'm happy to entertain questions. There's simply no time now, but the basic idea is to capture trends and seasonal swings. And then we are actually tracking the actual flows. We are calculating the differences to the baselines and do this always in nutrient equivalent. And so we actually have information about the remaining import needs and the available exports. The other big question that we had, in addition to establishing a baseline, was actually what is the appropriate time horizon going forward? I know there's a fertilizer year, but we have a northern hemisphere and a southern hemisphere. And as you will see in a moment, the trading patterns are really interesting and really counterintuitive or surprising, at least to me. Quite frankly, let me start with the right side of that, the picture, the exports. I did not know that the southern hemisphere is not exporting anything. At least this is the statistics we have available. So there is no exports, and the little blip you see was probably a statistical aberration. That's a trade flow from Brazil to Paraguay. I don't think would it actually happen, but actually there is no exports, neither of KP or N, from the southern hemisphere. So it's really the exports are all in the northern hemisphere. Then are they counter-cyclical? Are they in phase? Are they out of phase? And again, that is not clear. For K, it looks as though they are out of phase. For P, they could be in phase. For N, there is no pattern whatsoever. So given this rather erratic picture, we decided we just take a 6 and a 12-month period. And that's it. And it can be done certainly on a moving average basis, or it can be done on a month extension by month by month, etc., etc. All of that is possible, but there was no clear guidance from the data as to what the appropriate time horizon would be. Now here's the tracker. As said, I don't want to start it. I will share the presentation, and if you click on this, the tracker starts. It's super slow. I tried it out here. It's slow even in Rome, and there's certainly a need to improve. I would now show you the import needs of the European Union, and this would essentially allow me to prepare the next slides that you will now see. So the tracker, let me say that the tracker is super easy to operate. You can look into the imports as they exist, the exports as they exist, the remaining and the imports and exports, and for P, K, and N, and for 6 and a 12-month time horizon. So one of the things that I'd like to would have explained using the tracker is the fertilizer trade with both Belarus and the Russian Federation. And let me start with Russia. So here is what we observed as far as the European Union's imports from Russia are concerned. They really have contracted enormously. So, but this is important. It's in dollars, but we will see in a moment the same actually happens for the volumes. So both the volumes and the dollar numbers are down. So the European Union is certainly importing a lot less fertilizer, both K, N, and P from Russia. What impact did it have on Russia? Did Russia overall have lower revenues from exports of fertilizer? That is not the case. So it's more volatile as of recently, but in general, the revenues from fertilizer exports increased. They doubled practically over the last year, but that is mainly due to higher prices across the board. Russia exports everything, N, P, and K. So in general, it had no impact on the revenues obtained by Russia. In terms of volumes, it's slightly different, but even there, the impact is very, very moderate. Okay, one of the reasons maybe is a statistical problem because this is all mirrored data. So this is essentially the data that we have from Russia's trading partners because Russia is not reporting, but it's the mirrored data throughout the period, and so I would think it's rather reliable in terms of change, even if it's not reliable in terms of levels. The impact was very moderate so far. Now, the European Union, one would expect, as they are importing less from Russia, they import more or the same amount at least from the world and perhaps more from the rest of the world. The European Union seasonally imports very little between May and June, and that seems to be the case. So there is no boost in European Union imports of fertilizer. Perhaps it's due to the fact that we only have data until May. I think today they report for June. There is no such thing that we now see a boost in their fertilizer imports. And that is actually quite stunning. Lara just explained that 70% of the end production is curtailed in the European Union. I don't know what this means in terms of reduction of production, but I would expect that perhaps 20, 25, 30%. And that actually should now show in imports, and it doesn't. So the question really is, will the EU have enough fertilizer going forward? And that's one of the things you would actually discover in the tracker. And as I said, the fourth reason why we have the tracker is to start asking questions. Okay, so what you saw before was the gross imports, the net imports, and now we look into the gross imports, and essentially the same picture. The European Union, of course, imports, but it doesn't import more. If anything, it imports a little less, but on a seasonally adjusted basis, it's about the same. So if we now disaggregate this by region where the fertilizer comes from, the major drop is really from the non-EU Europe, and that's Belarus and Russia, and these are the yellow pieces of the bars, and they really have shrunk, and considerably so. So let me pause here just for a moment. The fundamental question that I have now is, given the fact that the European Union's production is obviously significantly curtailed, given the fact that gas prices have come down over the last couple of days, but they're still at whatever, $220, $230 per megawatt hour. So, and I don't think that a lot of the production has come back, so there's no resumption in production. The question that arises, just to make that absolutely clear, is will the EU have enough fertilizer? And if they don't import, what does it mean for yields? If they import, where do they get it from? And I mean, it's one of the things that I predicted a long time ago. To me, it was clear that the European Union will have to import fertilizer simply because it is a lot easier to import fertilizer than natural gas. So in order to overcome the transportability question that one has with natural gas, which can either come through pipelines, and that is difficult at the moment, as Shawn explained, or it comes through LNG, for which the European Union is not yet prepared, or not to the extent necessary. the substitution that can make up for the lack of gas imports would essentially be fertilizer imports, which would compensate for the internal production. But that doesn't seem to be the case. So the question is, what will happen there? Let me now quickly shift to Belarus, just to conclude. The sanctions are biting in as far as Belarus is concerned, and Belarus exports have really shrunk considerably. And that, of course, means that the rest of the world doesn't have enough potash. And that can not immediately in the next season, but perhaps in 24-25, or perhaps in 23-24 to a certain extent, eventually also have an impact on yields. And so with this and these questions, I would like to pass the floor back to Arnaud. Thank you very much for your attention.
Thank you very much, Joseph, for your presentation, and very interesting tool you put in place in order of tracking the trade of fertilizer. Maybe I would, with your specific focus, you put on EU. Does it mean also there is some information about the stocks, and if companies are also on farm level, indeed there may be some buffers there to apply and to see for the next season. So that's something could be interesting also to look with the panel and with Seth is, do they feel from the expert from the different regions there is some buffers at farm level or to some companies to face this potentially lack of fertilizer in some regions. Now I would like to give the floor and to go more on that toward the farm level, to the farm gate, I would say, and I would like to pass the floor to David Laborde. David is a senior research fellow at International Food Policy Research Institute, and David, you would tell us about potential impact on farm profitability and productivity. So David, you have the floor. David, your microphone is... yes, that's okay now.
Thanks for the introduction, and thanks everyone for being here. It's a pleasure, and actually the other panelists have perfectly introduced what I'm going to talk about. And Laura has already talked about how some farmers may react to prices, but I'm going to revisit a bit the prices and to talk about what can happen about fertilizer use, especially when we look at it from a profitability angle. Yes, so a slightly different graph than John has shown here when he was starting. Here I'm showing the evolution of the energy price, without the fertilizer, of course, the fertilizer price and the grain price in constant dollars. And yes, we are in a situation where in the last few months, prices have risen very significantly for the three group of commodities, especially since the spring of 2020. None of them are really at the peak that they had in 2007 or 8, or even worse, I would say in the 70s. But obviously, this very fast change also that has the markets. And something that we've seen in previous crises is fertilizer prices tend to overreact compared to the other. For a very good reason is the supply response. The supply elasticity of this sector is much lower than the other. Laura has shown also how this market is actually even more concentrated in terms of potential suppliers in many cases than energy market and of course food markets, where every country in the world more or less can try to adjust when they see a shock. Now, in the couple of recent months, grains and fertilizer prices went down, but there is a seasonal aspect of this correction when the energy market have not adjusted. And of course, the seasonality on the energy market is different than the seasonality on fertilizer and grain market, and that's something we can revisit in the discussion. Now, if I break down the price evolution for fertilizer product by main nutrient, what we see is obviously the fertilizer using nitrogen, therefore ammonia and natural gas, have been the one leading the the price increase. Here you have everything in index with a base for 2019. So obviously you see that prices have in some case double, triple, quadruple actually since 2019. Here also driving the discussion. But all these type of fertilizers are impacted in one way or another, sometimes for similar factors, sometimes for different factors. And of course, a lot of them are linked to the crisis. When you move to the product level, you are going to have a similar story, but what is interesting is first, you have some specific prices for specific commodity that have obviously even overreacted compared to what we see, ammonia in particular. And ammonia itself is a very interesting commodity because it can be classified, it's used largely at the world level, more 65% for fertilizer, but for many regulatory aspects and for some sanction, it's not a fertilizer. It's a chemical product. We have seen before that, you know, even if Europe has continued to import some fertilizer for Russia, actually the import of ammonia from Russia and Europe have totally collapsed because the treatment is different. So these different markets have reacted differently, but you see that even phosphate rock that we can think is kind of different from the energy market has also seen an increase, and that obviously coming from both some trade restriction linked to China, but of course also the role of Russia that is not as big as for nitrogenous or potash product as pointed by Laura, but still marginally it's important. And so you have these dynamics. Now you see that until now I am saying, okay, we have a price for ammonia, we have a price in some case even for P or K. I have already talked about the seasonality aspect when we look at the numbers. We also have to acknowledge that some of these numbers are very sensitive to the transaction that occur. It's not like the fertilizer market is a highly traded market where we have thousands of observations every day. No, we have a few observations every week, and that's added up to a few observations every month. And even some companies are actually really changing their price even a couple of months. So let's be careful when we look from one month to another. There is some noise in the number and seasonality, and typically after February, March, that's where we see every year a decrease of prices, and that will be, I think, also linked to what we just discussed before. It's not like if countries buy fertilizer all year long. There is a period where they can negotiate contract, and there is a period when they buy, but typically what we see is very price spike and shortage at the end of each calendar year, basically when everyone wants to make sure that they will have enough fertilizer for the next spring in the Northern Hemisphere. That's really something we see in the pattern of prices. But as I've said, another important aspect is there is not so much anymore one price for fertilizer. Until I mean, the current crisis, and just go back to some of the graphs, you see that most of these fertilizers are very moving together. But now, even for one product like urea, I am taking the three markets. Of course, I am removing the Black Sea here from the analysis because right now, during even the year, there was no more really markets for urea Black Sea prices. On the left-hand side, you see what is normal correlation of urea prices between USA, Indonesia, and the Gulf countries, particular Qatar and Saudi Arabia. And normally it's very high. Of course, we see that between the Gulf countries and the US, correlation is not perfect. It's 92%, but they are moving together. If now we look at the correlation of prices since September 2021, this correlation actually collapsed. We still see the Gulf countries linked to Southeast Asia because actually they supply this market, but the US market has currently a very different dynamics. So, you know, when we pick one prices to talk about fertilizer or to do some of the computation I am going to make, we have to be careful. And typically, you know, a world price for corn and a world price of fertilizer means in many cases nothing for most of the farmers because their reality can be locally different. And that's where we can see also at a specific location different response from them. And now just to give you an example, and just also to show you some of these countries that are facing some of the shortage we talk about, like in Sub-Saharan Africa. And here you see the evolution of prices. Everything is brought back in dollars per ton for urea. And you see how China has basically stabilized its fertilizer prices around $400 per ton. So actually, Chinese farmers are not going to have a big change in their incentive. At the world level, we have seen some fluctuation with some spike and some decrease. Now in Africa, we have more or less not seen this decrease yet. We have seen a significant increase of prices since last fall. As you imagine, the purchasing power of an African farmer, it's much lower than other farmers around the world. Of course, there is a credit constraints, but as I will talk about later, even the output price doesn't follow the world dynamics, and that makes the situation even more difficult for them. Here, the hint is when you're an African farmer, you will have to buy your fertilizer on world markets, and they're going to be imported. Of course, in some places, the government is going to intervene, but most of the production you do, in particular on food-related products, are sold on local markets. And the local market dynamics, for example, for corn in Africa is very different from what's happening in the US. And that's something we are going to revisit. So let me go back to farmers now. And since I was talking about Africa, let me take another example of Africa, because, you know, in some location around the world, and actually for most G20 countries, the question is more, are we going to use a lot or not so much fertilizer? And so are we going to adjust? Let's keep in mind that in many places in Africa, the question is not using it a bit more or a bit less, is using it or not at all. And what we see even today and what has happened in other crises is if fertilizer become expensive, you use it first for cash crops, not for food crops. So that's why even in terms of consequence in food security, things are going to be accentuated. Because at the end, that's normal. You know, if you have to spend your money, your cash, in order to buy fertilizer, you want to get more money, more cash from that. And you see on this slide how the cash crop on the right are the one that, in terms of coverage, so amount of hectares used by smallholder that benefit from fertilizer are much higher, when even basic and traditional crops, typically like sorghum and millet, will always be neglected. And that's also something we want to keep in mind for this part of the world and the food security implication. So now, moving back to the US. Where we have also much better information and data. So here the crop, the fertilizer to crop price ratio for soybean on the left, for corn on the right. All of this is normalized at 100 for 2019. And so obviously you see how for soybean, the price of fertilizer compared to the price of soybean has increased significantly, has reached some peak, and right now is 50% higher in average than in 2019. But also soybean is not sensitive to the three types of fertilizer in the same way. Typically, you need much less urea when you grow soybean than when you are going to grow corn. So, you know, once again, the price of fertilizer may change from one crop, from one country to another, but the dependency of a specific case of fertilizer also. And actually, because soybean is more linked to phosphate and to some extent potash fertilizer, it has helped to moderate the consequences of the price increase in urea. On corn, you will see basically a kind of similar story, even if the price of corn has actually fallen in the last couple of weeks, much more than the price of soybean. We still see this increase where basically the ratio between the price of your fertilizer to your price of corn has increased significantly. Now, what you see also on this graph is actually, if you do this computation weeks by weeks, as it is done here, you can see a lot of volatility. And another big question is when farmers take decision, when they have decided to buy their fertilizer, when the input trader have decided to buy fertilizer. And around the world, what we are seeing and what we have seen from Brazil, the US, Europe, and even in Africa is in some cases people are waiting because they hope that prices will go down, but at one point you cannot wait anymore. And we still have sometimes problem to know what are the level of stocks, especially between the traders and the farmers. But yes, we see this depreciation, if you want, in terms of profitability for the farmer, or at least risk of depreciation of profitability. Now, everything I said, you can think it's very theoretic. Here I'm going to do an example about what farmers are using. It's a calculator provided by some farmer organization to their farmers. So you see it's an Excel worksheet that tell you, and a long time ago, I was working in farms, and actually it was already printed, you know, you had the price of the wheat in Europe and the price of fertilizer, and they were looking what will be the best things. Now it is in Excel, but you see that you can enter this information and you will see how much, for example, here in fertilizer you are going to use less, and the impact on yield and the impact on income. So it's really that's things that are done sometimes with your guts if you don't have a computer, but most farmers in advanced economy are doing this very professionally, and they are adjusting their behavior. Here, this kind of funny or sad story about this calculator is the range of price of fertilizer for which the Excel tool was developed was not including the type of price spike we have seen. So actually, they have to redo the tool to advise their farmers. But really, you know, that's the reality we want to take into account. And even if farmers are not going to lose money, as soon as their cost of production increase and the cost of fertilizer increase, even for N, and as Laura said, N tend to be the less elastic, actually, we see this. And the response, of course, is customized to different locations. So that's a very reality. Now, if I go back to an example in Africa, you may see a very thin green line about 0.75, and actually that the value for the world. But here, once again, we take the ratio of the price of maize and the price of urea in Africa. We normalize it to 1 in September of last year, and we look at it in June of this year. And you see a decrease by 40 to 45%, and that's even worse than actually what we see in the US. Why? Because the price of maize in Africa has not increased in the same proportion at all that the price of maize in the first semester on world markets. So really, the dynamic of input price and the dynamic of output price have to be kept in mind when we think about how farmers could react. Now, because I think we will have a lot to discuss, I'm going to wrap up. Now, in terms of profitability, let me put things in perspective. So it's not just because, you know, the price ratio shrink that, as I've said, you are losing money. It really depends about how much you spend on your fertilizer compared that you spend on the output. Still, around the world, for different reasons, when you look at the expenditure structure of your farm, of your crop farm, of course, livestock farmers, it's a different story, but even livestock farmers are actually using fertilizer. You know, Ireland is using a lot of fertilizer to get intensive grazing area. But for crop farmers, it's between 10 and 15%. So at this level of price structure, you can tolerate even an increase of your fertilizer price by 20, 30, 40% without starting to run deficit. But as soon as your relative price change, what we see is still a reduction in fertilizer use. So it's not like, oh, we need to start to see farmers losing money for them to not using fertilizer. That takes place much earlier, as I was showing to you with this example of calculator provided to farmers. And less fertilizer means also less supply. Less supply will means, of course, for the world markets and what we are interested in AMIS, still high agricultural prices and more time to rebuild inventories. Now, when we talk about profitability, as I said, 10 to 50% is fertilizer, but unfortunately for farmers, it's not the only thing that is rising right now. You also have a part of the cost of production that is about oil and fuel and energy product that, as we have seen, have increased and some kind can increase even much more than the fertilizer prices in some location. It really depends. But also they face labor costs, but also other pesticides that are highly correlated to energy prices. So glyphosate prices, for example, follow a very similar dynamic. So when we talk about profitability, and still, I think we have some data gap to do it very seriously and systematically at the global level. So that's why I'm not going to show you the final answer on that. Is if we just do the fertilizer price increase, we underestimate right now the pressure we put on the farmer profitability. We can, build an index, and I think that Josef has also view on that. But really looking at this price ratio is already the good start. I'm going to stop here because I really think that first I've talked a lot, and I think we have a lot to discuss and potentially a question to address. Thank you.
Thank you very much, David, for your presentation. I think it was very interesting that you highlighted, first of all, from a farmer's point of view, this fragmentation of the market. So it's really looking more and more in I would say, detail about the market development and how the farmers are facing this movement. And the second point also in your comments about also exchange rates, because we have seen in the last months exchange rates movement, which may put also farmers when they need to import or not some new challenges. I would like maybe to say two things before to pass the floor to the chair of AMIS. Is first of all, I would like really to thank all the speakers of the first panel. You really brought really the information and the link between the different steps from the commodities and energy market to how the farmers are facing these market movements and how they have to react to this market movement. And the second point also, I would like to highlight to all the attendees that indeed the AMIS is having his YouTube channel, and that the webinars and the presentations which has been made during this first session will be on this YouTube channel. So you would be able to revisit and to look again and watch again the different presentation if you want to look more further. So Seth, now I would like to give you the floor because you have also panelists and they can address different points which has been discussed or raise questions in the first panel, and also take a question from the floor. Seth, the floor is yours.
Yeah, thank you, Arnaud, and some great presentations, some great setups. So what we'll do is we're gonna go on with some of our second group of speakers, but I encourage you all to put your questions, and we'll bring everybody in back at the end. So I think the first thing I want to say is we got a view from, first Arnaud mentioned commodity markets, and then we went all the way through energy and response around the world and how we see trade changing, and then finally bringing it home into what this means for producers. And I feel like I am less sure, even though I've got more information now after all those great presentations, because I think it really depends regionally on what the factors are that our producers are seeing. So I think we're going to jump right in, and let's go around and say, what are the specific features regionally, or what are producers thinking in this time of both volatile input prices and volatile output prices? And Fabien, your camera's not on, but I'm going to go to you first. So because I think Europe is in a unique situation. So Fabien Santini, Deputy Head of Unit at DG Agriculture in the European Union, and coming up to us from the land of the bears in southern France. So Fabien, your producers in a particularly unique situation to some extent. Please react to what you heard and maybe dial in on what you think producers in the European Union are thinking.
Yeah, I'll try to do that, Seth. Thank you for the presentation. Indeed, and it was mentioned by John and Laura and other speakers and Joseph. The situation in Europe is particular, and the surge of energy price in Europe is particular, with particularly acute increase in natural gas and also in electricity. And in fact, this is the actuality in Europe. I don't know if some of you have listened or at least read the press. We had the State of the Union of the European Union, not the US one, but the State of the Union speech was yesterday morning at the European Parliament, and it was all about energy crisis and how to tackle it at the European level. We had several packages that were announced along the last year, but the last ones, the safe gas for a safe winter plan concerning gas consumption and use and availability in Europe, and the new emergency measures announced yesterday on saving electricity will have an important impact on all this setting. John spoke of the price cap, but in fact, one of the key elements announced yesterday for us, more important, is this solidarity levy that has been announced between those companies that are making more profits and compensating the ones that are and fertilizer industries. And if you listen to the State of the Union speech of Ursula von der Leyen, she mentions the fertilizer companies as potential beneficiaries in the EU of these settings. Just to start. And again, David also was very right. It's not only about fertilizer for EU farmers. It's also about the energy bill in general. And some sectors, arable crops are in this case, are also very energy intensive, not only fertilizer intensive, and they have these bills that are there. But coming to fertilizer, we indeed have in Europe questions around affordability and availability of fertilizer. And I will start with affordability, with the prices. And I will focus mostly on nitrogen prices. The prices the farmer pay today when they order nitrogen fertilizer in Europe are increasing again. They have not increased at the level strictly correlated to the increase of the price of the gas. So there is a kind of buffer and time in the transmission, but they are increasing, and they increased since the beginning of July. They increased by 20% extra from an already very high level. That's for availability. For affordability, Joseph mentioned it, Laura also mentioned it, and we had the same figures about the curtailment of some of the industrial facilities that are producing nitrogen fertilizer or precursors to these fertilizers. The increased natural gas price makes that the industry in the EU has decided to curtail its production, and up to 70% of the ammonia production capacity, for example, is affected by these curtailment decisions. I would not know what would be the real impact on the total production of the EU in terms of nitrogen fertilizer. It's difficult to anticipate. These curtailments really increased in rhythm in July and August. So we still had 6 months before where the production was not subject to these phenomenon in Europe. And in turn, and I would like also to react to what Joseph said, and it was very interesting to see your tracker and the absence of increased imports apparently until April for fertilizer in Europe. The situation will change. You are basing yourself on the official statistics of Eurostat, so they are 2.5 months late. And as you said, today we will have the month of May or June, I don't remember. But we have more data based on customs declaration, and they indicate an acceleration of the imports. If you look just at urea, for example, on the period March to August, 2022, we are at plus 25% of imports in the EU compared to 2021. So I just made the comparison for 1 year to another. However, the important quantities are not compensating the reduction in the domestic production. This is for nitrogen fertilizer. For potash and phosphates, we have less concern. The demand is also lower. Also, Laura mentioned it. There is more correlation between the use and the price for these fertilizers, and we also had a lot of debates last year about the possibility to have a phosphate holiday for the fields in Europe, given that the soils are rather rich on this context. So what will the EU farmers decide in this condition is the next step, and it's a volatile and uncertain context. It was mentioned by Joseph, by David. It's very volatile, and the decision of farmers has to be taken in this context. It is difficult for them. But for the last harvest, and so the decisions taken during the first half of 2022, we can say that globally, Our yields have not suffered too much because of absence of fertilization. If you look at the wheat yield, it's on the 5-year average. The assumption is that the choice made by farmers, and this is consistent with what Laura said, was more to privilege nitrogen and maybe reduce a little bit the potassium and phosphate application. What was more impacting the yield in Europe are the hot and dry conditions in June and July. Not so much for wheat and for rapeseed, but much more for sunflower and maize, where we had a strong impact. Still, not too much impact last year on the yields, although we have some reports from some member states, and we still have to compile this because we are still quite close to the harvest, on some protein content that might have decreased a bit because some farmers in the EU might have decided not to go to the 3rd and 4th application in end of May or June to finalize. So all in all, a situation that, according to us, we made our own calculation for the farm income for arable farmers. We don't have the official statistics; it's our own calculation. But our appreciation is that in 2021, arable crop farmers in the EU had a good level of really a good level of income. It probably is going to decrease a little bit in 2022, but it remains much higher than all the years before, from 2017 to 2020, when the price was much lower for grains. So we still need to have the confirmation for this. Probably the projection to 2023 will be less optimistic, but really what the farmers would prefer most in the EU are not the arable crop farmers so far. They are more the livestock farmers that were in fact facing not only an energy cost increase for their energy use, but also a feed cost increase that was tremendously high. For next year, it's still very early to make prospects. We have we have the general feeling that there will be a reduced overall application rate for fertilizer. Some people talk of -20%. It's very difficult. These are corridor rumors and figures, so I would not bet anything on this figure. In fact, the winter sowing range is only even starting. It's only rapeseed where we are close to finish. For rapeseed, in fact, the prices are still, and the perspective of prices are still high. So it seems that the fertilizer cost is not the major downside factor for the decision of farmers for rapeseed. It's more the still very dry conditions, which are very important for rapeseed. Still, we are thinking, usually in Europe, the farmers are buying fertilizer when they have cash, so now, after the harvest, and they start to stockpile for the real big amounts that they will apply to their crops, which are as from the end of winter, so you have a certain series of course, there are some applications in the rest of the year for some crops, but the bulk is as from end of February until beginning of June. So this bulk normally is subject to purchases now already, and we see from statistics that not from statistics, unfortunately, we don't have the statistics. I will come back to that. But from intelligence and expert knowledge, we see that there is a decreased purchase by farmers in most member states by -30% to -50% compared to last year the same. So it's a big, but there are all indications that this is not going to be the final reduction of use of fertilizer in Europe. This is more a wait and see behavior by farmers. They still have time. Of course, the closer you get to the moment you have to apply the fertilizer, the more risky it is to wait to buy. And we don't, and Joseph said it, we don't have good intelligence on the stocks, but we know there are a bit of stocks. The only difficulty is to have a real statistics. That is indeed, Joseph was right. It's something where we need to grasp a better information. So Still, another thing, purchase is one thing, the use is another thing. We should not underestimate the progress on optimization that are possible through precision farming, through a certain number of nutrient management practices. I've discussed this morning with some farmers, they bet also on an increased acreage of pulses crops in Europe, where the farmers would dedicate some areas for this crop that don't need nitrogen to be able to put a bit more nitrogen on the rest of their surface. So challenging situation, you said it. We adopted several measures. I talked very shortly of the energy related one, but there are also farming measures related. Where we are trying to boost both our farmers or our fertilizers to have as less disruption as possible. But over the long term, what the EU remains committed with is a decrease in the use of mineral fertilizer. We have a target by minus 20% by 2030. Without hampering our global production through these improved agronomic practices and precision farming and recycling nutrients, like said Arnaud about this, the development of green ammonia packages. We inaugurated this year a pilot plant in Spain for production of green ammonia based on hydrogen and renewable energies, and all this is the way forward. As Ursula von der Leyen, our president, said yesterday, the more we save, the less we pay. And this is a win-win.
I'm sorry to interrupt you. I'm sure that you'll get tons of questions on the other end. All right. I'm going to. And
you interrupted me when I finished.
Yeah, no. All right, great. So I mean, and I'm glad we started with you because there is a lot going on in Europe, and I'm very curious about European producers' response and the kicking the can down the road in terms of fertilizer purchases, because I think we'll hear the same thing in the U.S. maybe, but I want to go to Rajiv, where where I think we've already seen the Rice Export Council. We've already seen the Indian producers, the South Asian producers making some adjustment in terms of fertilizer use. So Rajiv, can you tell us your response to what you heard in the beginning of the panel and kind of how you think this affects South Asian producers? I mean, you all have already had a couple challenges, weather challenges and export challenges. So we'd like to hear your view on this as well.
Well, thank you, and a very good morning, good afternoon, good evening to us where you all are. First of all, let me tell you that India consumes roughly about 26 million metric tons of fertilizer every year. Okay, and it has gone up, of course, over a period of time at the rate of about 6%. So in 1962, let's say we were taking about 3 kgs per hectare, and today it is 175 kgs per hectare. So obviously the requirement is huge and large. The kind of population we have, and the kind of programs which the government has to feed 1.4 billion people is quite enormous. So in 1947, like, we were about 340 million people, and we were producing roughly about 50 million metric tons. Today we are 1.4 billion, and we produce roughly about 370 million metric tons. So obviously it has gone up about 7 times, even though the population has grown about 3.5 times. So production has, of course, increased in agriculture, and that's why India has become the net exporter of food grains. I represent actually the rice industry. I'm from the Rice Exporters Association. So I can share with you, in the last 2 most deadly years, the pandemic years, we had done exports worth $20 billion. It was roughly about, say, around 21 plus 20. It's about 41 million metric tons of rice was exported in the 2 years of pandemic. So it was great work done by, and we must thank the farming community of India who has produced that kind of, production. And obviously fertilizer plays a very important, very critical role. Now we have come from that challenge to another challenge because of the situation in Russia. And also what we have to do currently is, of course, India has about 25 plants which are gas-based for urea production. So, and there are a few plants which were not working up to its optimum. So the government is taking it on priority to improve, the performance there in those factories and plants. But still, we will be importing roughly about 7 to 8 million tons of fertilizer. Of course, urea consumption, which has about 46%, normally, if you see 25 million ton which we import, 17 million ton is nitrogen based, and 6 million ton is phosphorus, and 2.5 million ton is potassium. So this consumption is, of course, there, and the government has to manage this. I think you mentioned about export challenges also. Of course, that's very recent. It has just come in because country has to have its own security program, the food security program, and there is a very long program which is being taken by the government to feed about 800 million people for last 1.5 years. So there is free food grain being distributed there. So of course there is a lot of pressure in the system of production. And this year the production targets are about 330 million tons of grains, out of which rice will be close to about 126 million tons. So, and our consumption of rice is roughly about 105 million tons. So there'll be, of course, an excess of production, and there are some buffer norms also. So probably the world may not face that kind of problem from Indian exports, but yes, certain varieties might be a crisis because in certain parts of India, the rains had been very good. Certain parts of India, the rains were scanty. It was like not so much. So fertilizer, on the fertilizer story, what we have to do is, of course, this production has to go up in those units which are not performing to the optimum. And there are some new plants also which are in the process with the government, this thing, and fertilizer production is being taken into a lot of priority. One of the panelists mentioned very nice comment that even though the food prices are going up, but farmers' income is not going. Is not growing, and they are still in abject poverty in many places. So the government has also in the it has taken an agenda to double the farmers' income. In past 3 years, there had been a lot of effort on this side to double farmers' income. We have done some study of rice. I can share with you that DAP is about $150 per hectare, which is being applied by farmers here. Urea is about $40 per hectare. Pesticide is roughly about $125. But a lot of money goes out if there is not good rains, because for paddy cultivation you need 4 times of watering, and this is about $320 per hectare. So if you have good rains, there are no yellow leaves and all, then your crop yield is also better, and then you don't spend on water, pumping water into your field. So this way, if you calculate all this put together, it comes out to be $1,205 per hectare, whereas the price which a farmer realizes is roughly close to about, let's say, $1,600 per hectare. So the income comes out to be roughly about 25-26%. But what the government has, declared in its manifesto, and in which the officials of Ministry of Agriculture are working in that direction, that farmers' income has to be double, and it has to come to close to 50%. So it's a major task in front of the machineries which are working there. Yes, major part, of course, comes from government support. Like these fertilizer plants have to be, put in place in quick time. So this from my side. I think I'm open for questions. If there are any specific related to rice, I'll be more than happy. But otherwise, also, I'm very happy to share the experience of Indian, farming and whatever we can do for the best of, living of the world. Thank you so much.
Thank you, Rajiv. And let me come back and say, Rajiv Kumar, Executive Director of the Rice Exporters Association, thank you for your contribution. I get excited about talking to our individual guests, so sometimes I skip over that. So I think we should pivot here to the Southern Hemisphere. I'm going to start with Ferdie Meyer. And Ferdie, is the managing director of the Bureau for Food and Agricultural Policy in South Africa, and one of my favorite titles, an extraordinary professor at the Stellenbosch University in South Africa, and a producer. So I think, Ferdie, you can also cover all these sensitivities we heard. Would love to hear your regional reflection on this from a producer's perspective. And reminding you, I apologize, I could talk to you for hours, but we do want to at least get a couple questions in if we can. Thank you.
Thanks, Seth. I'll be quick. Is my sound good? Great stuff. Okay, so yeah, I think I can just maybe make some quick remarks, and I think probably more as a producer than as an economist. You know, we've had great presentations so far, and I think spot on in terms of the analyses and comparison, price increases, etc. Maybe just two points around South Africa. So we are net importers of fertilizer. We have relatively small local production of nitrogen phosphate, but potash obviously all coming in imports. Nitrogen, the main source, Saudi Arabia and Qatar, and then phosphate, potash, that's where Russia and also Saudi Arabia are major sources of imports. So maybe just those comments were already made, and they are spot on. It's more about the total package of production costs. So in South Africa, if we look at our production cost for field crops, they have increased by 60%. But it's really about timing, and I think, David, you mentioned it. It's the time that you purchased your inputs for this crop. In other words, the crop that just came off, that we've harvested in the winter time, our winter, May until July. We've had some late rain, so a lot of the maize also came in almost to August. But in principle, the producers were actually in good shape. So, and as farmers, we talk the kind of the slogan that we use is you buy cheap and you sell expensive. So depending on what time you bought last year, and many farmers buy already, you know, when they do their tax returns in February of the previous year, fertilizer prices still were elevated. They were higher, but not nearly at the levels where we're currently seeing them. So, and we had grain prices up by 40%, and oilseed prices last year up 40 and another 16 this year. So overall, with good rain, near record yields, the South African farming, at least on the summer crop side and field crop side in general, is actually in very good shape. So we've seen major investments, also a lot of investments in farming equipment, etc. So it's been a good year. And obviously the big question is, what does the future look like? Now, again, it's about this whole uncertainty around, are you going to now buy expensive and sell cheap? Or how far can you extend or postpone your procurement, waiting, hoping for prices to come down? And I think that's what all these graphs and all the presentations have already alluded to. So in reality is our own projections from BFAP side, from the Bureau for Food and Agriculture Policy. We just ran our baseline. We are still estimating that area is going to expand in the coming production season. In other words, that the area that will go into production now starting in October and being harvested next year in 2023 by about 5%. But the interesting part here, colleagues, is the biggest expansion we are projecting is coming from soybeans. It's about all of the expansion. We have maize coming at the same hectare, sunflower relatively the same, and a big expansion in soybeans. Now, there are two reasons for that. The one has already been mentioned, and that's obviously soybean requires much less nitrogen. It is heavier on potash and phosphates. But there's another big benefit, and that soybean is farm-safe seed. So in South Africa, we have this a technology levy system where farmers pay a levy per ton to the seed suppliers, seed producers, but they can retain the seed. So your seed costs are much lower. For soybeans, we just came out of a record harvest for soybeans. Farmers feel upbeat about it, and you can look at sales. So you can't get a bag of soybeans currently on the market and you can't get a bag of rhizobia products on the market. So we haven't talked about in any of the presentations referring to seed treatments like rhizobia. That's really popular and big demand for it. So it's kind of all showing farmers are changing, their patterns are shifting. And that's another factor I think that we haven't talked about so much is around if farmers can actually rely a bit, and I would almost refer to the word as mining. Can they mine their soils to some extent and use less fertilizer? Now, currently, if I look at numbers, latest industry expectations or reports are that as we're sitting here today, South African farmers have ordered about 25% less than the same time last year. So sales, the orders are definitely down. Our projections are maybe 10 to 15% less fertilizer, but it's a bit of a cat and mouse game, literally happening currently in this market. Sometimes there's a special on the market, and I think you can imagine farmers, their cash flow position and their uncertainty. The same holds for fertilizer companies in South Africa who have to import stock, and they're not sure at which prices and how big will the order be. So it's this real cat and mouse game. How big are the orders? If there is product, if you want to buy a ton of fertilizer now, you can get it. Prices are very different. Sometimes they're special, and then farmers jump for the specials, and then they hold back and they hope for lower prices, and then prices move up a little bit. So it's really a cat and mouse game that's going to play out. But overall, I think we will see the hectares. There will be a general shift towards soybeans. I think there will be some mining of the soils. Over the years, we've had like 2-3 good seasons now. And I know of many large-scale farmers. So South Africa relies on about 90% as commercial farming, where major soil corrections have taken place. So farmers are using precision agriculture. All the nitrogens and the soil corrections have been done. And I think there's a good possibility for some mining and to ensure that margins are positive for the coming season. So Seth, I think I'm going to stop here, and I'll look forward to any questions.
No, that's great, Ferdie. You raised a whole bunch of things I'd be really concerned about. And I was thinking the same thing is you can run short P and K for a while, but I also, Laura gave us I think a bit of an unnerving view on NNP going forward, right? In terms of potential prices. So I think there swirls a lot of uncertainty for producers. And Agustin Tejeda is the chief economist at Bolsa de Cereales in Buenos Aires at the exchange. And let's go to him next, because they're making decisions now. They can't kick the can down the road. I'd love to hear what he thinks about Argentine. And then we'll throw in there the fact that we haven't talked about the dollar being strong. And if we're going to talk about exchange rates, we should have an Argentine do that. So Agustin, tell us what you reflected on from those conversations, and how you think that affects both Argentina and the broader area, if you would. Thank you.
Okay, thank you, Seth. Good morning, everyone from Buenos Aires. Thank you, Seth, for the introduction and the opportunity to be here discussing such an important topic as the implication of the current situation on fertilizer markets in ag production throughout the world. I would like to start my comments analyzing the effect that we can now observe, as you said, in the short run. As you all know, at this moment, we are at the beginning of the sowing window for summer crops, soybeans, corn, sunflower, and sorghum. And what we can highlight is that the 22-23 agricultural season is taking place in Argentina in a context of great uncertainty, with international but also domestic factors affecting planting and input adoption decisions, including the application of fertilizers. Therefore, in addition to the factors that have been analyzed in today's seminar, which are faced by oil crop producers around the world, Argentina faces unique local challenges linked to the macroeconomic crisis and domestic policies. Indeed, many of the changes that we have been adopted recently in economic and agricultural policies have been adopted precisely because of the fragile and volatile economic situation. Many of these policies imply greater restrictions on foreign trade, both export and import, that affect domestic prices, deepening the distortion we are observing in grains and input price ratio, and resulting in fewer incentives to apply fertilizers and other kind of inputs. Among them, we can mention, on one hand, those that have negative impact on the price obtained by Argentinian producers for their grains on the domestic market. I mean, these are macroeconomic instability and a significant gap between the official and the informal exchange rate, export duties, and export restrictions, which also have negative effects on transparency and on the functioning of the market. Because of this set of policy, Argentina has, according to OECD data, the most unique and negative agricultural policy in the world, with our producers receiving a lower percentage of the international price. To this combo also, we should add limited access to financing. On the other hand, we have policies that have negative effects on input prices and input availability. The scarcity of foreign exchange reserve and the necessity of fulfilling the agreement with the IMF has led to the adoption of measures by our central bank that limit the acquisition of foreign currency for imports, including imports of fertilizers. It's important to note that nearly 65% of Argentinian fertilizer consumption comes from import, with a greater dependence in the case of phosphate fertilizers. If the cap imposed by the central bank were fully operational, around 30% of fertilizer input needs will remain unmet the new crop season. But we should say we are optimistic in the measures that taken recently by the government to relax those restrictions. We are optimistic that those measures will work and will allow companies to provide all the fertilizer we will need for the next crop season. So what can we expect for fertilizer consumption in Argentina? It is clear that high input prices and the increase in production cost will affect the application of fertilizer in Argentina. We are expecting an 8 to 10% decrease in total fertilizer consumption. However, according to preliminary surveys, the expected reduction in the fertilizer consumption per hectare for the next crop season will not be significant. Nevertheless, this means that the growth trend observed in fertilizer consumption rate per hectare in recent years will come to an end. Instead, as we saw for South Africa, the major impact will be seen in planted area. Corn will be the most affected crop, given that it uses inputs such as fertilizers intensively and its higher cost per hectare. In Argentina, in comparison, for example, to soybean production, we need less fertilizers. Corn is also vulnerable in Argentina, along with wheat, to increase export restrictions, given its greater domestic consumption and its role in the local food production chain. Right now, Argentina has export quota for those cereals, for wheat and corn, called equilibrium volumes. And recently, talking about the dollar, the government took the decision to temporarily offer a higher exchange rate only for soybean sales to promote farmer sales, giving the oilseed greater competitiveness in comparison with grains. So to sum up, due to this context of higher cost, more restriction, and economic instability, we expect an increase in the planted area with soybeans and a reduction in corn planted area during the next crop season. This in turn will reduce total fertilizer needs. And of course, we shouldn't leave climate out of the analysis. Argentina is going through a major drought for the third year in a row, which will affect, or it is affecting, farmer decisions, reducing fertilizer demand and production and export estimate levels, and affecting our contribution to world food security. Thank you.
And it's a good point to end with there, Agustin. I think everybody's looking around saying, hey, how do we how do we better use those resources that we have in terms of fertilizer resources as well too. I mean, we're talking about the immediacy of the next crop year, but in the US, we're focused on that next step as well too. And as I turn here, I'm going to turn to Shawn Arita, who's senior economist in the Office of the Chief Economist at USDA. Shawn, we can't all grow soybeans. Looks like the South Africans and the Argentines and everybody's going to grow soybeans. We can't all grow them. Reflect on what you heard here, and I do hear a little bit about kicking the can down the road. That works as long as the prices actually do fall. What are you seeing on the U.S. side?
Thanks, Seth, and thank you to all the speakers. Excellent presentations and thoughts, very insightful. A lot of great points covered here. I'll keep my comments really brief. So on the U.S., you know, the general market
and keep them louder too, Shawn. We want to hear this important information.
And
all right,
as well. So on the U.S. side, you know, for prices, U.S. farmers, you know, we generally face the similar pricing dynamics as other markets, owing to the highly integrated nature of the global market. But there have been some deviations, and following up upon some of David's earlier points on fragmentation of markets, localized market dynamics, there have been a few factors worth mentioning, presenting a situation that perhaps is a little slightly less bad or less extreme than other markets, meaning the U.S. has had, in a few instances, faced slightly cheaper prices than other markets. So, for example, on the war's impact, you know, again, great following up on Laura and Joseph on the trade side. We know that the U.S. has been less dependent upon Russian fertilizers relative to Latin America and Europe. Like these countries, the U.S. had to compete for that limited pot of global fertilizers by bidding up higher prices. But we have observed, you know, the resulting price increases in the U.S. to be slightly less extreme. You know, Brazilian and European urea prices, for example, they had been upwards of, you know, more than $200 per metric ton more expensive than what U.S. producers had been paying earlier during the springtime period following the invasion. Some of this had been attributed, though, to weaker than expected demand in the U.S. The previous fall, we had average applications of we had above, I would say, average applications of P&K. Additionally, floodings and late plantings in the Midwest during the spring led to shorter application. When further, there was a fairly sizable shift of acres away from corn to soybeans and other less fertilizer-intensive crops. Also, there was we do have anecdotal information that there was a sizable pullback in some of the P&K throughout the year, responding to the higher prices. This, in combination with the other factors, did lead to an overall lower than expected demand within the U.S. vis-a-vis relative to other countries. And we could see that if we're looking at the price spreads, the U.S. DAP prices, for example, relative to many major markets, were, you know, non-trivially, they were cheaper by upwards of, in some periods, $250 per metric ton than Latin America or even North Africa earlier during this year. Many of these discounts have since narrowed since then, coming again more on par. I mean, for ammonia, you know, this is we've seen rising price spreads. I mean, U.S. ammonia prices are now trading, you know, roughly about $250 per metric ton cheaper than the EU, linking that back to the EU natural gas type of discussion that John had made earlier. But, you know, I'll reiterate Laura's point too, that again, it's a highly globally integrated market, pulling up prices everywhere. U.S. has been exporting nitrogen to EU, and by larger measures, a lot of these global prices are just moving together. We have seen a few instances of price discounts, premiums flaring up across various market shocks. But, you know, by and large, a lot of these prices are just all going up together. Separately, to quickly add to David's comments on margins and profitability, on our side, we've, you know, been hearing a lot of concerns on the potential cost squeeze for 2023. That is weaker crop prices, but input prices remaining elevated. This is putting tremendous uncertainty on farmers. According to USDA ERS estimates, you know, 2022 fertilizer expenditures, they were up about $15 billion or more than 50%. But we also had forecasted crop receipts to be up as well, about $36 billion, offsetting a lot of this higher cost. But, you know, also going back to Ferdie's comments, you know, in terms of the timing of input purchases, these are really, really key. They can really make or break financial outcomes. We do think that this very uncertain environment leaves a situation where there'll be very uneven outcomes across farmers, you know, with the same crops within the U.S. Some growers could have done extremely well this year if they locked in the prices at the right times, while others could have made off rather poorly. You know, looking into the situation for 2023, ag output prices again have fallen. Fertilizer prices are still very high. You know, in the U.S., growers will start making their input decisions soon, locking in those fertilizer prices through the fall and winter. Then in a few months, typically, then they'll start locking in their crop prices. So there can be that asynchrony or that lag between locking in input versus output decisions, leaving a lot of risk for this cost price squeeze in this upcoming year. I mean, in theory, a grower could lock in both their input and output prices at the same time. That could serve as sort of an internal hedge. But again, all farmers do things differently, so it's not exactly clear. There's going to be a lot of inequities and outcomes for growers, again, just simply due to a lot of the pricing and timing of these decisions. But, you know, anyways, I'll stop there. I've already used up my time. I'll yield back to Seth. Thanks.
All right. Hey, thanks, Shawn. And I think that, you know, you talk about this ability of U.S. producers. Everybody expressed anxiety for producers about this volatility in both input and output prices. And I think that U.S. producers, they have this ability to forward price. Not everybody else does. And what I'm going to do is, as I ask some of the panelists from the first session if they would come in and like to comment on what they heard, I'd also like to ask Rajiv in particular. I'm going to start out with a question saying, we've talked a lot about fertilizer. I think others have also mentioned, I think both Ferdie and Shawn, I think all of them mentioned this cost squeeze. I'd like to go to you as a little bit and say, how does the rest of the budget, crop budget, look in terms of, say, rice production in India and for other crops? Are producers as concerned or facing those other increase in prices because clearly they don't have the same ability to hedge off some of those risks? I'd like to hear your thoughts on the rest of the cost balance for Indian producers.
Okay, so thank you for your question. The point is that India is facing some problems in the eastern part of India. There are about 3 provinces where rice is grown in very large quantities. Okay, there are 3 provinces where the rains have not been up to the mark, and therefore the production loss can be there to the extent of about 5 to 6% on the country level. So let's say the 4th estimate, which the Agriculture Department has made, it was close to about 130 million tons. So this will drop down to maybe 124, 25, 26 million tons. This is what we estimate. Our local consumption is roughly about 8 to 9 million tons a month. So let's say about 108. So we are still surplus in terms of production. So there is no crisis as such. And there is a buffer stock already available with the Food Corporation of India, which have about 30 to 31 million tons as of 1st September. So therefore, the situation is not grave from the rice point of view, and therefore the prices may not escalate to that extent. Because there had been delayed rainfalls in those 3 provinces of the eastern state, but still, the farmers have done some late sowing, and also probably we may catch up with the figures, but definitely it is not going to be a shortfall to a major extent. So the prices, of course, it's all market finds its own equilibrium depending on the demand and supply. So if the supply is good, obviously, there should not be a problem in terms of pricing in India.
Oh, no, very good. I think for many months in this process, I tend to think that prices had been generally increasing since the fall of about 2020, except rice. Rice had been well supplied at a global level. And yet now I think we're seeing rice kind of being drug into this uncertainty and volatility in the marketplace. That seems to be an element.
But what I can say is that, like in last 2 years, we said we had done fabulous work of feeding the poorest of the poor, I would say, because a lot of our consignment went to many countries. It went to about 165 countries in last 2 years. The thing is, of course, the government has one concern, that it has to keep its food security program intact when it is feeding 800 million people. Providing grains to them for last 2 years since the COVID times. So this is a major challenge, of course, and but we are equipped that way. The prices, yes, fertilizer, as I said in my opening remarks, that there are a lot of efforts being put in to secure farmers getting fertilizer in time, which is looked after in this cropping season. For the next, Rabi crop, I think we'll have to gear up with our production and things will fall in place. So not looking very pessimistic, looking very good, not too optimistic also, looking at the global scenario. But yes, we are pretty okay.
And I think, and thank you, Rajiv, for bringing us back to that important factor of food security, both locally in terms of food security and the role of the region in supplying food security, both to its neighbors and around the world. So I really appreciate you bringing that question. So I think we only have a few minutes left. So I'd like to go, I think I'm going to take your prompt and kind of put that to our guests here and say, hey, how, this uncertainty about production, this tightness in global markets, and maybe the role of your region in food security going forward. And Agustin, I'm going to start with you. If you want to give us a couple minutes on what production prospects, global food security, regional food security.
Okay, thank you, Seth. Yeah, I will mention that we have some trends that allow us to look at the future with greater optimism, at least in Argentina, thinking about our contribution toward food security. One is that Argentina uses agricultural input less intensively and in a more environmentally friendly way in comparison to its competitor, which give us a greater capacity and flexibility to deal with this current crisis, right? And also, I would like to mention two trends that allow us to think that we can increase our production in a more sustainable way. One of them is that in Argentina, we have to highlight that we are using agricultural technology that helps farmers to use input and resources in a more efficient way. And we think that as, for example, variable rate input application, and we think that in the current scenario, the adoption curve of this technology could be accelerated. Also, in Argentina, we have seen an increase in the use of biofertilizers, biopesticides. They are already representing between 5 to 10% of total input use. So we believe that under this scenario, these trends have also been accelerated. And this is a very good news for the transition to a more sustainable production system. So we think that Argentina has along with this factor and our natural resources and a dynamic and environmentally friendly production system, Argentina has a huge potential to contribute to world food security in a sustainable manner. Of course, if a better set of agricultural and commercial policies is put in place. Thank you.
Ferdie, I'm going to go to you next because I think keeping your producer hat on here, right? All the producers always have pride in, hey, I'm feeding the region, I'm feeding the country, I'm feeding the region, I'm feeding the world. So as you look about kind of rationalizing fertilizer use in South Africa, its regional importance and food security, what are your thoughts? Where are your concerns? And what do you see going forward regionally in terms of maybe effects on fertilizer use in the short run and regional production and security?
Sure, Seth. Thank you very much. So, I mean, if we go to the region, it's a completely different ballpark. We have to remember, Africa uses a lot less fertilizer, and there are these big subsidy programs, which effectively governments are now being cash strapped with these fertilizer programs. High fertilizer prices, availability is an issue. So certainly, if we just go up north, I came back from Malawi yesterday. Completely different ballpark. So, I think this is going to push many of the African countries, and Africa has various countries, various dynamics in it. But I think we're going to see also a faster move, or that's the hope, also to more crop diversification. I mean, we not long ago, 2 years ago, we actually had a surplus of maize in the southern African region with good rainfall and very good crops. Now climate is becoming a major issue. Or is already in this current season. With the La Nina, also the projections coming for the next season, we are very concerned for Eastern and Central Africa, where rainfall typically is less. So overall, Seth, I think hopefully a bigger focus, bigger drive on more crop diversification, one. Two, obviously, infrastructure remains a major problem in Africa. So moving goods in and out is a big issue, and that includes your fuel and your fertilizer in the first place. From a South African perspective, again, it's exchange rates, major issues. We had some issues at the port, but because a lot of the production is obviously commercially, or the majority is commercially produced, you know, having the option of futures markets, hedging yourself, it's easier said than done. Being a producer, you have to really decide when you're going to do your hedge, when you're going to make your decisions, but certainly a different ball game in South Africa than up north. So yeah, I hope that gives kind of some of the pointers.
Fabien, I'm going to put you on the spot a little bit here. And so when I don't necessarily think about Europe itself as being a food insecure region, but obviously you're a contributor to global food security. How do you see current fertilizer dynamics and the thought about the Europeans' role in providing for global food security? And what do you are there issues in this next season, or do you see like a change in the thought about how your producers see themselves in terms of global food security?
Yeah, thanks for the question, Seth. First, we were happily surprised in the end by the yields of our wheat harvest this year, compared to initial estimates, and that keeps us in a position to be able to be in a net exporting position, quite significant for this crop, which is important for food security. Absolutely, yeah. So of course we will have perhaps some shortage of maize to compensate. But maize also is going for feed, and you know that the feed use has decreased quite significantly last year because of the high price of the animal products, and so a certain relative slowdown and for other reasons domestically where we have a feed dimension. So I think for the coming marketing year, so the grains marketed from until June 2023, I don't think we see the position of EU being weakened. On the contrary, as to the contribution to global food security. And as you're right, we don't really have major concerns for the domestic food security in the EU. When it comes for next year, again, I would repeat, and it's also written in the chat in Laura's answer to Brendan, the decrease of use in fertilizer is not resulting in a proportionate decrease of yields. There is a lot of local conditions, but there's a lot of possibilities to optimize and to improve the efficiency of your fertilization rate. And I'm sure this will play its role into having, even if in the end we will have a reduction of the fertilizer use in Europe, not to have such a decrease of yield. And I would add just one thing, and it's the experience of this year. The climate of the year is also very important, and it can completely offset all our discussions. Huh?
Absolutely. All right, Shawn, same question to you. I mean, I think when we look around, again, I don't necessarily know that fertilizer availability is a direct impact on U.S. food security, right? When you and I talk, the sentence of farmers, I can't get fertilizer, should be followed by at a price I want to pay in the U.S. That's not true everywhere. So tell us a little bit about how you view the coming campaign in the U.S., fertilizer, and perhaps how the U.S.'s role in global food security looks.
Yeah, so sure. So, I think Laura put in some good points here. I mean, part of it is, we have to think about the prolongedness of this situation. We can go by maybe for a year with skipping applications that may not necessarily have much of an effect on yield. And it's unclear. I think what's unique about this situation, we not only had very high price spikes, but again, in 2007 and 8, they fell down rather quickly. This is looking to be a lot more of an extended period of high prices. So that's something to keep in mind there. I will say on the food security side, similar to the EU, again, probably much less concerns domestically, but U.S. is of course a major exporter. Touching upon some of that question that John raised in the beginning, I'll quickly mention again, just from the U.S. perspective, the commodity share of food retail prices is rather low. I mean, it's about 16% according to our estimates of food retail. Energy makes up about, according to our estimates, about 3.6% of the so-called food dollar. Fertilizers would also make up a smaller share on top of that. But, I think, I guess one point just to throw out there in mind, for us, there's just a lot of macro related factors going on. We had here the other day a very, very bad CPI report. What that means is that's going to lead to, it's going to further increase the chances of the Fed keep on hiking up the interest rates. Those are going to have a huge implications on just the global commodity markets. And we know that that'll transmit to energy, to fertilizer prices, to food prices. So that, and of course, weather. I think those are you got to add those levels of variables into the mix, which we know is going to be extremely uncertain, making, once again, more uncertainty for the farmers. But anyways, thanks, Seth. I'll stop there.
No, that's great, Shawn. So I can really appreciate that Rajiv brought us back to kind of this core element of food security, but then you kind of open this door about a global recession that's a possibility and, what's everybody's risk right as we're trying to close this conversation off. I think, unfortunately, we probably should have split the panels into 2 separate seminars and gone at it that way. But, I could talk to you all for hours, quite honestly, but we're already a few minutes over. We're going to put the recording up online, and I'm going to invite Arnaud back on the screen and Joe back on the screen. And I want to thank all of the folks from panel 2 and from panel 1. And then I think I'd like to hand it back over to Joe to give any closing comments he'd like to give. And again, thank you all. I apologize. We had to constrain you on time because we could have gone on for a long time on this.
Yeah, thanks, Seth, and thanks everyone for being staying with us. I have incredible attendance for this webinar, but I think it speaks to how good the panels were and how informative everything was. And so let me give my thanks first to all the panelists. Thanks for answering my emails and agreeing to do this, and in particular to Arnaud and Seth for hosting and moving the program along. Thanks to all the AMIS Secretariat, in particular Dennis and Alexi and Simone, who have helped put this together as they always do. And we'll be continuing to do these webinars. And so obviously as AMIS starts to ramp up its own coverage on fertilizer and everything, I think we'll be looking forward to get more input from some of our panelists and others. But thanks so much. And again, as Seth said, this will all be available on the AMIS YouTube channel. So hopefully any follow-up, you can contact us directly. So thanks so much.
Thank you.